All right, as you can see in our calendar, guys, we have 5 accounting standards for this session for us to review. So far, if you remember, Intermediate Accounting 3 or Financial Accounting Part 3, as I mentioned, appeared these accounting standards appeared on those chapters. So maybe in your financial accounting, for now, you were not able yet to reach that part. But for me, I'm gonna start off already with the theories. So para someday, if you're already in the financial accounting part 3, in your review program, you're able to already know the different theories involved. So here we go, guys. For the first accounting standard I have is pass number 24 regarding related party disclosures. So in this accounting standard, in this in this PowerPoint presentation, I'm gonna have some important details you need to remember for uh, past 24 regarding related party and transactions and disclosures, and what are the most important aspects of these accounting standards. We need to enumerate some examples I'm going to provide to you guys of who or what transactions are pertaining to related parties and additional disclosures for that one. So please remember, pass number 24 for related party disclosures. It prescribes the necessary disclosures regarding related parties. Mamaya i-define natin what are related parties. Relationships or can be transactions as well. Outstanding balances and commitments between an entity, tayo yon, yung reporting entity, and its related parties. So for this accounting standard, our core principle is to the financial position and profit or loss, the related financial statements, sila yun, of the entity may be affected by a related party transactions, even if related party transactions do not occur. Ano ibig sabihin yan? Ang sinasabi ng past 24, we may not have any transactions or accounting transactions happening with our related parties involved, but for as long as there is related parties exist that are existing in our entity or business, we should disclose or report such. Of course, we already know somehow, pag wala yun sa financial position or income statement, we are disclosing in the notes to financial statements. Yan ang sinasabi niya dyan, na isusulat daw lagi sa FS or disclosure ang mga related parties na involved. Ito, as I mentioned, ito yung in-explain ko, the mere existence daw of the relationship may be sufficient to affect the transactions of the entity with other parties. So, kahit wala daw business transaction, walang journal entry related with related parties or pertaining to related parties, if there are existing related parties, please take note it should be enough to disclose such in the notes to financial statements. Ganun lang naman yung lagi so far sa CFAS. When it comes to disclosures, either, number one, nasa face ng financial statements yon. Ibig sabihin nun, if it is in the face of the financial statements, there's an equivalent amount or value sa financial position, balance sheet, or statement of comprehensive income in the income statement. Nevertheless, if there is no value, usually, pangalawa, notes to financial statements, disclosure lang siya. So, doon lang siya nag-fall lagi. So, what are the necessary disclosures? Therefore, should be provided to draw users' attention to the possible effects of such relationships and transactions on the financial statements presented. Kasi mamaya makikita natin that some related party transactions are involving your family members in the entity or some few close relationship with such. Kaya we need to disclose. That's the importance of past 24 so far. Aside from the disclosure, the next slide, as you can see, here are the samples of the related party transactions or relationships, guys. Related party, as per definition, please remember this one is always being asked under past 24. This is a person or entity, other businesses meaning, that is related to the reporting entity, tayo yun, that is preparing its financial statements. These are some few examples of related parties. So if you saw these items or these people, it only means they are related parties under past 24 disclosure. But if you did not saw the said persons or entities, it's the conclusion might be it's just a typical business transaction. It's just a typical stakeholders maybe of the entity, of our entity. Okay? So here are the samples. As you can see, first, a related party might be an investor of our entity and somehow pertaining an investor-investee relationship where control, joint control, or significant influence exists. Dadating tayo dyan someday, ano ang interpretation ng control, what is significant influence, and uh, joint control of different entities as well. So somewhere in PFRS 9 or investments. Practically, uh, our investors who provide large amount of money or material amount of interest to our entities. We already know some before in the previous accounting standards, a material amount somehow is providing a significant amount of or percentage of interest or ownership, no? Or in short, more than 50% or might be a majority owner or shareholder, parang ganun. Material might be 10% or more. It might depend on the different scenarios of the reporting entity. But here, control, joint control, significant influence exists between us and the investor. He or she might be related parties or the said entity might be a related parties. Next one, take note, key management personnel. So key management personnel involves management or in short, the board of directors. There might be some cases or transactions that our board of directors or management have their own transactions with our entity. Diba? Like they buy our own shares of stocks or ownership. They want to be at the same time an owner or shareholder of our entity. Then they buy a certain amount or level of interest or stocks or shares in short. And key management personal transactions are considered related parties. Number three, yan yung pinaka-common, close family members. As per accounting or past 24 definition, when we say close family members, it's just basically the parents, husband and wife, and the siblings. Cousins, possible, uncle, aunts, or the rest of the relatives might be a possible family members. But for past 24 interpretation, they are not close family members. So in short, in other accounting basis or interpretation, close family members might be, in short, the direct family members. No? Remember, husband and wife, siblings, they are just basically the close family members. Let's say for example, in the entity, one of the board of directors or management of the entity, uh, his or her brother or sister or siblings or husband or wife had a transaction with our entity, like he or she is a stockholder as well. This is the case of past 24 for related party. That's why we have close family member. Ano? Party ka ng entity, board of director ka, part ka ng management and all. Then, yung parents mo daw, yung siblings mo daw, may transaction with the entity. So somehow we might consider an interest or family interest maybe or self-interest for that aspect. Alam niyo na yun in the auditing theory side. So if there is transaction with such close family members, so is a related party disclosure daw. And lastly, some post-employment benefit plan. Dadating tayo sa accounting standard for employment benefit. But practically, post-employment benefit plan are, of course, when it comes to the benefits engagement with our employees and different personnels of our entities, that's the time or maybe a case if we need to disclose such, if there's a plan or program as to number 4, post-employment benefit plan, somehow might be considered a related party disclosure. Okay, so just remember these different related parties involved. Key investors or main or major investor or investee relationship, or our investors have a material amount of interest or investment in our entity where they possesses control or joint control or significant influence. Key management personnel have transactions with our entity, basically the board of directors or the management. Our close family members, our husband or wife, siblings, direct family members have transactions or relationship, of course, with our entity, and some post-employment benefit plans. These are related party disclosures. Some definitions, let's move forward. Control, ayan. Sa accounting, last time I believe I remember isa sa mga in-interpret natin is probable, possible, and some remote interpretation when it comes to percentage. This time, we're gonna interpret again some terms. How do we account for a control, a significant influence to that? Because as you can see from slide number 5, pag ganyan daw kasi ang status or ownership or investment ng ating investor with our entity, they are considered related parties, right? So when do we consider a investment from our investor? Of course, a control or possessing a control. Control is where an investor controls an investee when the investor is exposed or has rights to variable returns from its involvement with the entity and has the ability to affect those returns through its power over the investee. That's the time we have control, or the investor have a control with the entity, with our entity. Sa investment topics or accounting standards, the interpretation of control is 50% or more or majority of the ownership or interest ay hawak nung investor. We say that is a control. Okay? So 50% or more usually palatandaan in accounting for control. Investment topic. And is considered an advanced accounting topic as well. Investment in subsidiary, investment in parent company, something like that, diba? So investment in parent company, 50% or more ang investment or ownership or interest. So the said entity is considered a related party if control exists. The next one, significant influence. Yung significant influence, practically, there is not 50% or more ownership or interest or investment, but a significant influence is the power to participate in the financial and operating policy decisions of an entity, but is not control over those policies only. Significant influence may be gained by share ownership, statute, or agreement. It's like a typical voting rights or interest of an investor, diba? Every one share for ordinary shares is somehow considered a voting right, or they can vote when it comes to corporate decisions or policies. Ganon din yung features ng significant influence, but does not really possessing control, but some typical shareholder or investor rights, like ayun, participating in the different company decisions, they vote together, or they receive dividends. Practically, it's a significant influence. No? In accounting, when we talk about investments for related with significant influence, usually it does not fall with 50% or more of the ownership. Hindi siya umaabot up to 50% or more. But usually significant influence is 20% or more of the ownership or investment of the said investor. No? So please remember these basic definitions of what is control and what is significant influence. Sometimes students tend to interchange the definition. It's different. Control is more than 50%. Significant influence does not reach an investment or ownership of 50% or more, but at about 20% or more. Whereas for joint control or joint ventures or joint agreements to that is the contractually agreed sharing of control over an economic activity. Usually joint control is on a short-term basis or per project basis or per project base. It does not really possess a longer duration of agreements like for joint control. Yeah, so as you can see, all of it, control, joint control, and significant influence, possesses or reflects past 24's related party disclosures. Moving forward with some other definitions, key management personnel, ayan, explain ko na kanina, but I have here this slide. Key management personnel are those persons having authority and responsibility. As you can see, it's a basic definition of management for planning, directing, and controlling the activities of the entity, directly or indirectly, including, as you can see, the director, whether executive or otherwise of that entity. So it might depend on the structure of the entity, but basically on the management side, on the strategic diba? Management, the definition is strategic side of the business or the entity's operational activities, not on the tactical or might be not on the operational side, more of the strategic side for key management personnel. As you can see here, I already mentioned this one, close members of the family. No? Under PAS 24, they are related parties. Your domestic partner or children. Children of the individual's domestic partner. No? Sometimes kasi diba, yung pag separated husband, the separated husband remarry with other uh, with another woman. So the said woman might have children already. Ito yung sinasabi sa letter B. Dependents pa rin niya or somehow close family members pa rin siya sa definition. Related party pa rin siya. Children of the individual's domestic partner and dependents of the individual or the individual's domestic partner. So as you can see, in short, direct family members are related party are related party transactions. So kanina, a while ago, we already defined what is a related party. This time, related party transaction. This is a transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether a price is charged. So, ayun, the fact that your family member or direct family member is engaged or involved with transactions of our entity, whereas you are part of the board of directors or management. O, diba? Parang we somehow, some stakeholders might question bakit doon pa siya nag-invest yung asawa niya nasa board of directors or parte ng management. Diba? Parang ganun. So for past 24 disclosures, you need to report that your family members have transactions with your entity, investors possessing control or significant influence are having ownership with our entity's stocks or shares. So it's just a typical notes disclosure lang as a requirement for past 24. So in this slide, for slide number 8, are items na hindi nyo mahanap for past 24 related parties. So these are unrelated parties. Basically, when we say unrelated parties, they are just the typical, the normal, the usual accounting transactions or transactions of the entity with other stakeholders. No? So we don't need any much additional disclosures anymore. Like, for example, a typical customer or supplier, we purchase a certain amount or volume of money involved with our supplier. The customer bought something with us. So the typical business or accounting transactions, they are not related parties. We have no additional disclosures needed under PAS 24. So here they are, unrelated parties. Number one, two entities simply because they have a director in common or they share a common director. So please take note that that is not a related party. Yung director or management of our entity, while at the same time and management, parte rin siya ng management or board of directors ng other entities. Meron yung term for corporation code or legal reasons. So for as far as PAS 24 is concerned, the said director is not a related party. Okay. Number two, that's why I am avoiding to use joint ventures because it's different from joint control somehow. As you can see for number two, two venturers lang simply because they share joint control over a joint venture. Or in short, joint venture is not a related party disclosure or is not falling under PAS 24. No? So in advanced accounting, basically is a different way of accounting such for joint venture and that is not part of related parties. Number three, providers of finance, trade unions, public utilities, take note, and departments and agencies of a government that does not control, jointly control, or significantly influence the reporting entity is not a related party, but a typical or normal business-related transactions with our entity. No? Number four, I mentioned this already, our typical customers, our typical suppliers, franchisors, distributor, or general agents with whom an entity transacts a significant volume of business. Hindi porket main or major customer siya or supplier, and does not possess control or significant influence, they are not related parties. They are just the typical business-related transactions with our entity. Simply because by virtue of the resulting economic dependence. So as you can see in this slide are unrelated parties. So we don't need any additional disclosures for this one. So usually typically for the different questions in past 24, you will encounter which of the following are related parties. So if you encounter this slide or items, they are not part of that one. Or which of the following are not related parties? So you already know in slide number 8, the not related parties involved. Okay? Disclosures. So if the question is about notes disclosure or disclosure is needed under PAS 24, number one, as you can see, the parent subsidiary relationship, regardless of whether there have been transactions between them. You're going to disclose how many control or controlling interests does the parent have with our subsidiary or otherwise vice versa with the subsidiary. So notes disclosure. Number two, key management personal compensation broken down into the following categories. Spots and loans to key management personnel. So different salary personnel programs or benefits they have. So because it will depend on the bylaws and the agreements or decisions of different entities. It might have a different package or plan with the management's compensation. So whatever that plan or program is, as you can see, if it is a related party, they should disclose such in the notes to financial statements. And number three, the related party transactions. May sale ba? May purchase? May investment ba na involved? What is the nature of the said transaction? You should disclose such and any outstanding balances involved. So take note, disclosures that related party transactions were made on terms equivalent to those that prevail in arm's length transactions are made only if such terms can be substantiated. So there should be a valid proof or valid documentation enough to show that there's really a related parties involved. But as you can see, kahit walang transaction for as long as the said parties exist, we should disclose such, as you can see from slide number 9 in the notes to financial statements. Okay? So please don't forget in past 24 the definition of what is a related party, our common examples, and some other definitions of terms as to control and significant influence. Again, in slide number 9, pag nakita nyo ito, they are not related parties. Therefore, there's no additional disclosure for such. It's just a typical business transactions with entity. Okay, that ends past 24 for related parties. You can ask anything and use our chat box. I'm gonna read that later on when we reach halfway the different accounting standards. I'll move forward with as you can see in our calendar, we have aside from past 24, we have past 10, 8, 34, and TFRS 8. I'll move forward with past 10 for now. For past 20, sorry, we're done with past 24. Let's have the past 10 for now. Events after the reporting period. For events after the reporting period, it's another disclosures or way of uh, reporting such. It might depend on there are cases that we need to do adjusting entries and cases where we don't need to do so. So past 10 is the basis for this one for any events pertaining to the uh, event reporting period. So our learning objective is to define what are those adjusting or non-adjusting events and define the set events after the reporting period. What would be the impact of such in our financial statements? If there is an involvement, we need to do adjusting entries or just notes disclosure. So as per definition for past number 10, events after the reporting periods are those events favorable or unfavorable that occur between the end of the reporting period and the date that the financial statements are authorized for issue. In short, uh, basically, these events happen after the end of the balance sheet date and before the said financial statements are authorized for issue. No, there are some cases that we need to do adjusting entries and to adjust the uh, the financial statement of the current reporting period. There are cases that we ignore and don't do any adjusting entries anymore. So what will be our guide or as a basis? This is past 10. Okay? So for now, please remember what is the definition of events after the reporting period. Kasi in the next slide, sasahatiin na natin sila. As you can see, there are two events after the reporting periods. Sinasabi ko na kanina pa, it can be an adjusting event, whereas you're gonna need an adjusting entry. Number two, non-adjusting events after the reporting period. So what is the main point of difference? Adjusting events after the reporting period are those that provide evidence of conditions that existed at the end of the reporting period. So guys, basically adjusting events after the reporting period, the nature, the origin of the said accounting transaction really happened on the current year or reporting period. Okay? Let's say for example, our current or reporting period currently is year 2022. So basically our balance sheet we're gonna end December 31, 2022, correct? And we already have let's say we have an accounts receivable for year 2022, an outstanding balance of the said accounts receivable, but the final amount of the said receivable was found out after December 31, 2022. But the transaction related with the receivable really happened, let's say November 1, 2022. So it really happened within the year 2022. That is number one, adjusting events after the reporting period. You only figure out the amount after the reporting period, but the origin, the transaction really happened in year 2022. So we need to report such. We need to update. That's why it's called adjusting events after the reporting period. In short, adjusting events siya pag talagang nangyari within the current reporting period. And you only found out the additional information after December 31, 2022, or after the date of the balance sheet of the current period. However, kasi sa number 2, non-adjusting events, those that are indicative of conditions that arose after the reporting period talaga. Let's say, for example, of course, our sample is December 31, 2022 is the end of our current reporting period. The transaction happened January 1, 2023. Oh, that is non-adjusting event already for year 2022 na reporting period, di ba? Because it already happened on the next succeeding year, which is January 1, 2023. So we're not gonna adjust anything because it's for 2023 transactions or report. So number 2, non-adjusting events after the reporting period. The next date that we need to remember, as you can see from slide number 3 a while ago, uh, from the definition of events after the reporting period, events that occur between the end of the reporting period and the date of the financial statements authorized for issue. So the slide for number 5 is the date of authorization of the financial statements. Basically, this is the date when management authorizes the FS for issue, regardless of whether such authorization for issue is for further approval or for final issuance to users. Typically, is 3 months after is 3 months after the current reporting period. So it might vary. It might depend on the entity's nature or practice. But basically, like if it's ending December 31, 2022, usually March 2023 is there's already a date for authorization, but it will depend. This is just the final date when we need to see if it is really an adjusting event for our current reporting period. Ang huling palatandaan natin is the date of authorization of the financial statements. So from our sample a while ago, the current period ending December 31, 2022, kung ang na-approve ng Board of Directors na i-issue na ang FS for year 2022 like March 1, we're gonna look for the different events after the reporting period until March 1 lang, kumbaga, of 2023. So, Yun yung huling palatandaan or huling date na kailangan natin for past 10 as to events after the reporting period. These are the samples, guys. So I provided already a lot of samples for adjusting or non-adjusting events uh, that we are using for past 10 interpretation. So as you can see, pag nakita nyo ito na adjusting event, basically, we need to do an adjusting entry or adjust the transaction for year 2022. So here are the typical samples for adjusting events. So sabi natin kanina, the origin or the transaction really happened within the current reporting period, like in our sample for year 2022, pero na-detect nyo lang siya after December 31, but end before the date of authorization of the financial statements. So examples, number one, the settlement after the reporting period of a court case that confirms that the entity has a present obligation at the end of the reporting period. Ano ibig sabihin nung example ng case 1? Our example is our current reporting period is year 2022. Let's say for example, October 1, 2022, someone filed a case against us. Let's say our our product is an obsolete or the quality does not meet expected uh, with expected quality or of the said product came from our customer. So let's say for example, October 1, 2022, a customer filed a case against us. And it is probable, ayan, from the previous accounting standard, it is probable that we're gonna lose the case na nag-deliver talaga tayo ng obsolete or not quality product as expected from us of the said customer. So nag-file siya ng case. Let's say for example, uh, probable ang chances based on our legal analysis na matatalo tayo sa case. And hindi tayo sure kasi wala pang final verdict. There's no final decision with the case. Let's say, for example, again, the said final verdict or decision of the case came out January 5, 2023 already. And that's example number 1. The accounts payable happened on October 2022 for the said case because we estimated that we're going to lose. And it really happened. January 5, 2023, the case arrives already. There's already a final verdict with the case. So the said expenses, the said legal expenses that we're going to pay should be reflected on year 2022 because it really happened or originated for year 2022. That's the so-called adjusting event. Okay? Kahit 2023 na nalaman yung final verdict or decision doon sa case, nangyari siya October 2022, we should report on the current reporting period. And yun nga, nangyari na the settlement happened after the reporting period and there's a present obligation talaga na may provision talaga na mag-a-arise doon sa case. We need to record the liability and the related expenses or loss for such. Okay, that's an adjusting event. Second one, the receipt of information after the reporting period indicating that the asset was impaired at the end of the reporting period. For example, the bankruptcy of a customer that occurs after the reporting period may indicate that the carrying amount of the trade receivable at the end of the reporting period is impaired. Yung sample ng 2 Roman numeral I or 1 is meron tayong accounts receivable, let's say October 2022. Tama? So, maire-report yun under the balance sheet for year 2022. However, there are reasons that showed that the said customer we have accounts receivable with is under bankruptcy. Or in short, we're not gonna collect already the receivable. We're not gonna be able to collect already the receivable. And the customer just informed us like January 5, 2023 already. So it's beyond the current accounting period. But as you can see, it's an adjusting event because there's a clear proof or reason that we're not gonna collect the receivable anymore. So yeah, just in case of bankruptcy of the customer and we have accounts receivable and it happened after the current reporting period, but before the date of issuance of the financial statements, as you can see, it's an adjusting event. The next one is Number 2, the sale of inventories after the reporting period may give evidence to their net realizable value at the end of the reporting period. When we reach past due someday for inventories, the measurement for inventories is lower of cost versus net realizable value. If you already finish inventories in financial accounting, tama? And the net realizable value amount or measurement was showed or available after the reporting period. Ayan. Eh siya yung lower. So should we need to adjust the inventories? Yes, because it's an adjusting event. Uh, the measurement of inventories is lower of cost or net realizable value. The inventories exist for year 2022, pero yung net realizable value lang niya na-figure out or available lang January 2023. Ayan. We need to adjust the inventories if it is lower. The net realizable value amount or measurement is lower than its cost. Yun kasi yung basis ng measurement ng inventories under past due. Yun ang sinasabi niya, adjusting event daw siya. Number 3, the determination after the reporting period daw of the cost of asset purchase or the proceeds from assets sold before the end of the reporting period. Ayan, nabenta mo daw yung asset, binili mo daw yung asset within the current year 2022. Yung final amount or price daw niya available lang after December 31, 2022. So, is an adjusting event? Number 3, yes. Because the final amount or measurement was found out after the reporting period but before the date or of issuance of the FS. And the origin, the nature of the transaction is within year 2022. So, as you can see, it's an adjusting event. We need to reflect the correct amount or the updated amount or measurement of the said item. And number 4, just take note of any discovery of fraud or errors that indicate that the financial statements are incorrect. So any typical errors in accounting reports or financial statements that affected the different items in the financial statements, basta the origin or nature ng transaction is within the current period and you detected the fraud, you detected the error, after December 31, 2022, but before the issuance of the FS for year 2022, as for our example, yan, you need to adjust the said items that affected. Ayan, typical na clerical error. Let's say, for example, the different amounts, you recorded cash 10,000. Nag-cash count kayo December 31, 1,000 lang pala yung laman. Eh, nag-cash count kayo January 5, 2023 na, after the holidays. So, the said error should be reflected for 2022, no? So that's the key for adjusting events. Nalalaman nyo siya, you figure out that it is an adjusting event because the origin or nature of the said transactions is within the current reporting period, but any trace or any detection of the said measurements or amounts are only found after the reporting period. But we have a limit there, but before the date of the financial statements authorized for issuance. Adjusting events. We need to do an adjusting entry if it is an adjusting event. It's not enough to disclose in the notes. For the next one, non-adjusting events naman. So as you can see, if it is non-adjusting events, we don't require any adjusting entries, but a typical notes to financial statements disclosure will be enough. Samples here. Number 1, any changes in fair values, forex rates, interest, or market prices, interest rates after the reporting period. That's the key there if it is a non-adjusting event. The transaction or the measurement update or amount happened after the reporting period. So it's just a note disclosure. Let's say, for example, we have a foreign-related transactions within year 2022. The forex rates differ or changes every day. And December 31, 2022 Forex versus January 1, 2023 Forex, there's a change or there might be a different price is stated or reflected. So as you can see, if it is happening after the reporting period, it's just a typical notes disclosure. Next one, number 2, casualty losses or fortuitous events like fire, storm, or earthquake occurring after the reporting period. But before the financial statements were authorized for issuance, that is ay non-adjusting event. Only notes disclosure. Oh, lumindol daw, tapos January 1, 2023 nangyari. Affected yung building natin ng entity. So, hindi na daw siya magre-reflect sa not an adjusting entry for 2022 FS, but just a notes disclosure for the 2022 FS. So, that's the key there. Non-adjusting event, as you can notice so far, all happening after the reporting period. Number 3, litigation arising solely from events occurring after the reporting period. This is totally different from sample number 1 a while ago for adjusting events. Because as you can notice here for number 3, the said case arise after the reporting period. So it's non-adjusting event. Okay? A while ago, as you can see here, it's within uh, the only the final verdict or the final settlement of the said case happened after the reporting period. But the origin happened really within the current period of year 2022 in our sample. So it's an adjusting event a while ago. Here, the said case really happened after the reporting period. So it's just a non-adjusting event for year 2022 FS, and you need to, of course, settle the obligation for year 2023 already. Number 4, another non-adjusting event, just remember this one, major ordinary share transactions and potential ordinary share transactions after the reporting period. So that's the key there again, after the reporting period. Major business combination, advanced accounting topic, after the reporting period. Announcing a plan to discontinue an operation after the announcement came after the reporting period. And declaration of dividends after the reporting period are all non-adjusting events. In this slide, for number 7, pag non-adjusting events, only notes disclosure is needed. A while ago, in slide number 6, pag adjusting events siya, adjusting entries are needed. So, amounts or account titles will be affected pag adjusting events siya. I hope you remember those dates and some examples if you encounter in the theoretical part of if you encounter this one in the theoretical parts of intermediate accounting or financial accounting. Okay. As you can see, for disclosures, only the date of authorization for issuance, adjusting events, and its material non-adjusting events. So this is summary of a past 10 so far. And so remember definitions. What are the adjusting events, non-adjusting events, the samples of the adjusting and non-adjusting events. And you're good to go for pass number 10. Okay? This is the end of our past 10 for events after the current reporting period. Okay na ba? For past 10? Wala daw. Okay, so far, we already finished to accounting standards, past 24 related party disclosures and events after the reporting period. So I hope you remember that one. I'll continue with past number 8. So after this, we're gonna have a very short break before we end with past 34, PFRS 8, and of course your quizzer later on. So any questions, I'll be reading after past 8, the third accounting standard for this afternoon. So medyo magkakamukha na sila ngayon for past 24, past 10, and this time past number 8. Past 8 is about accounting policies, changes in accounting estimates, and errors. So dito, we're gonna have or review the different important terms to consider. When do we recognize or do we know that the said event or item or transaction is changed in accounting policy or estimates and errors? and differentiate between the accounting treatments of the said items under PAS 8. Okay, so definitions and some examples will be expected here for PAS 8. The said accounting standard prescribes the criteria for selecting, applying, and changing accounting policies and the accounting and disclosures of changes in accounting policies, changes in accounting estimates, and correction of prior period errors. So the first definition is about accounting policies under PAS 8. So guys, please remember this definition. This is the valid definition of accounting policies under PAS 8. Basically, these are the specific principles, bases, conventions, rules, and practices applied by the entity in preparing and presenting financial statements. Basically, we term that one as accounting policies. What is your basis when it comes to uh, uh, costing the inventories? Are you using FIFO? Are you using average? So accounting policies serve as a basis. And accounting policies are basically the relevant PFRS. Ayan, PAS 2 for inventories, PAS 16 when you depreciate for PPE. Ayan, adopted by the entity in preparing and presenting its financial statements. So accounting policies yon, yung mga sinusunod daw ng entities. Anong accounting standards? Anong PFRS yon? Basically, these are the accounting policies. Okay? The first definition. Oh, alam na natin ito, di ba? We already learned and defined everything here previously from conceptual framework and past one. So PFRS are standards and interpretations adopted by the Financial Reporting Standards Council, and they comprise the following, of course, PFRS, PAS, and interpretation. So related with accounting policies. Here are the hierarchies of the PFRS when it comes to the reporting side of the entity. Of course, number one dyan, you accept yung GAAP natin, PFRS, PAS, or basically the accounting standards we are following. That's the first initial basis when we do financial statements, when we do financial reporting, no? Kung walang available accounting standards daw, or PFRS, number two is the judgment, professional judgment of the said entity or the management. And when making judgment, take note, management shall consider all the requirements in other PFRS dealing with similar transactions. Tsaka ka lang magkakaroon ng judgment pag wala na talagang acceptable or applicable accounting policies or standards applicable with such. As you can see, nasa dulo ng ranking or hierarchy yung conceptual framework pag walang basis, pag walang accounting standards na applicable. No? As you can notice, the last basis will be conceptual framework application. Management shall consider the following as well when it comes to pronouncements or any announcements made by the different standard setting bodies, meaning internationally ba yan or nationally speaking, and other accounting literatures and industry practices. As you can see, huli lang, last lang na accounting industry or business practices will be the basis of you doing the financial statements. Always the accounting policies will should reflect PFRS or accounting the acceptable accounting standards, no? Huli lang ang conceptual framework and other practices. So here is a summary. The scope of PAS, first is a change in accounting policy, is a change in the measurement basis. The accounting treatment for change in accounting policy, as you can see in our table, is transitional provision, or in short, retrospective application. Just in case it's impracticable, do prospective application. The effect of the change in accounting policy should be, take note, the beginning balance of retained earnings if accounted for retrospectively. All right. Changes in accounting policies. Nagpalit ka daw ng FIFO, from FIFO method to average method ng inventory costing. So, any change in accounting policy, take note, letter R, retrospective application ang basis. Okay? Anong ibig sabihin? What is the meaning of retrospective application in accounting? Forward, future periods, or previous periods should be adjusted. What do we mean, guys, by retrospective application? Yun daw ang initial effect or basis of the change in accounting policies. Okay, when we say retrospective application, basically the previous accounting periods will be affected or pabalik the present and the previous reporting periods na where the items or the said item reflected or change should be reflected as well. Usually, pag sarado ng libro or close na yung books, reflected under retained earnings. So, accounting policies, retrospective application, lagi yung tatandaan. Yan ang unang basis niya. Pwede rin daw bang prospective? Yes, in case it is impractical to do retrospective application. But the general rule, changes in accounting policies, retrospective application, effect, beginning balance of the retained earnings. Kasi nga baka sarado na yung mga libro ng mga nakaraang periods or reporting periods. Okay? The next one, change in accounting estimate. Later, pupunta tayo ulit dyan. But basically, change in accounting estimate is changes in the realization or incurrence of expected inflow or outflow of economic benefits from assets or liabilities. Yan. So depreciation, my way of computing such, and you already have a different value of the realizable value or the salvage value, and some other accounting estimates, yung provision, yung estimated liabilities namin, yung mga percentage niya, parang ganun. Those are changes in accounting estimates. And take note, pag change in accounting estimates should be prospective application naman daw siya in accounting. When we say prospective application, ano naman ang impact niya? Forward, future periods, or previous periods of accounting, of the different accounting periods. And as you can see, the effect of adjustment in change in accounting estimate is the profit or loss already of the current period and possible future periods if the change affects both. So, tatandaan nyo, prospective application, the answer is from the chat box, forward. The present and the next succeeding periods will be the change or impact, will be reflected. So, pag change in accounting estimate, prospective, profit or loss. Pag change in accounting policy, retrospective, previous periods. Anong palatandaan nyo rito sa boards? Kasi lumalabas or tinatanong to minsan lagi. Yung iba, na pagpabaliktad nila si change in accounting policy, tsaka si change in accounting estimates. What I only remember for past 8 is that I should not pair those with the same first letters. Yun lang. Change in accounting policy is letter P. So, hindi ko dapat siya ilagay sa letter P na perspective. So, therefore, change in accounting policy, ang partner niya dapat the retrospective. Parang yun lang. Therefore, sa change in accounting estimate, letter P yung partner niya. Si prospective application. And that's it. I remembered what is change in accounting policy and change in accounting estimate as per theory side of that one. Ano daw ulit yun? Yung policy kasi P, letter P as in Papa. Hindi ko sinasama sa letter P. Hindi ko pinipair sa letter P. Therefore, kung hindi siya P, siya yung retrospective. Therefore, kung si change in accounting estimate yun, siya na ang ka-pair ni prospective application. Just a side note for that one. Siguro yung iba may ways of remembering such. And number 3, correction of prior period errors. Intentional man or unintentional misapplication of principles, misinterpretation of facts, or mathematical mistakes, lahat yan na errors. Take note, basta errors, retrospective application of basis. Gaya ng change in accounting policy. Pwede rin ba prospective application? Yes, gaya ng change in accounting policy if it is impractical to do so, to do retrospective application. Take note, kamukha rin siya ng change in accounting policy because the beginning balance of retained earnings, kasi nga retrospective pabalik. At ang naiwan na lang doon na item, pag previous periods ay retained earnings. Kaya as you can see, the basis or impact should be with the beginning balance of the retained earnings if accounted for retrospectively. Okay? Let's move forward. Later, I'll provide examples of complete examples for this one. We just need to remember the basic definitions and the guide. Take note, guys. Sometimes in the boards, Roman first First bullet, when it is difficult to distinguish if it is a change in accounting policy or a change in accounting estimate daw, anong answer? That is considered a change in accounting estimate. You're not sure or binanggit kung hindi accounting policy, change in accounting policy or baka change in accounting estimate daw yun. Hindi sure yung information or tinanong sa theories. Pag hindi sure, change in accounting estimate daw ang assumption. Okay? Another note, an entity shall change the accounting policy only if the change is, number one, required by the PFRS. Mostly, lahat ng PAS na na-encounter natin does not really have a lot of changes over the past periods of the boards or the previous years. More of the investments maybe and some few with leases and derivatives, mga ganun. So investment related side. But the rest ng tinatakal natin so far sa CFAS is really does not affect much when it comes to changes in PFRS. So pag hindi naman daw required, wag daw mag-change ng accounting policy. And if it is results to a more relevant and reliable information about the entity's financial position, performance, and cash flows. Doon lang daw ang guide natin to change the accounting policy. Okay? Now, the much awaited examples. So guys, these are the examples of change in accounting policy. Pag hindi nyo nakita dito sa slide na ito, baka change in accounting estimate siya. Okay? Again, change in accounting policy should be retrospective application. Pabalik. Examples, nabanggit ko na to kanina, change from FIFO cost formulas for inventories to average cost formulas. Nagpalit ka ng inventory costing method, FIFO to average. Considered a change in accounting policy under past due. Next one, changes in the methods for accounting recognizing revenue from long-term construction contracts. Pwede kasi siyang percentage of completion method or cost recovery method in your advanced accounting. So pag nagpalit, change in accounting policy. Number 3, take note, change to a new policy resulting from the requirements of a new PFRS. Yan naman yung typical na change in accounting policy. Nagpalit ng basis because of the acceptable PFRS or accounting standard. Next one, changes in financial reporting framework such as PFRS for SMEs and to full PFRS. Kasi is a valid option or choice for the said entities regarding with PFRS for SMEs or if they, just in case they adopt the full PFRS na pinag-uusapan natin sa CFAS. Number 5, initial adoption of the revaluation model for PPE and intangible assets. Kasi sa past 16, may mga binanggit na methods, tapos you change it to revaluation model. So it's a change in accounting policy. Number 6, change from the cost model to fair value model of measuring investment property. Kasi yan yung dalawang models din niya. So any changes is a change in accounting policy. And number 7, change in business model for classifying financial assets, resulting to classification between financial assets categories that is under PFRS 9 for financial instruments guide. Sometimes we are changing the fair value changes in profit or loss or as other comprehensive income, parang ganun yung cases niya. Kaya if these are changed, if there are changes with such, ayan, it's considered a change in accounting policy. Okay? Hindi nyo nakita sa slide number 9, malamang nasa slide number 10 siya because it's a change in accounting estimates. Ito naman, pag change in accounting estimates is a prospective application. Examples, estimates nga eh. So it focuses more with amounts. Pag accounting policies, it focuses more with the basis. Diba? Pag estimates is more with the amounts or items ang involved. Yun yung isang guide din natin. As you can see, number 1, change in depreciation or amortization methods. Sa change in accounting policy kanina, binanggit niya specifically kung ano yung method. Pero sa change in accounting estimate, you change wholly the depreciation or amortization methods itself na hindi nabanggit in change in accounting policy. Therefore, is a change in accounting estimate. Sa past 16 kasi, aside from straight line method, you know, merong double sum of the year digits, may double declining, units of measurement, and sum of units and the rest. of the other depreciation ways to depreciate PPE. So this a change in accounting estimate. So number one example, PPE, depreciation expense and amortization expense. Number two, nabanggit ko na to kanina, changes in estimated useful lives of depreciable assets at MAPA, residual, or salvage value change. And akala mo maibebenta mo pa yung PPE natin for 10,000 after its useful life, pero 5,000 na lang pala. Changes in accounting estimate. Akala mo magagamit mo pa for after 15 years, pero 10 years lang palang useful life. Change in accounting estimate. Should be prospective application. Next one, changes in record allowance for impairment losses and uncollectible accounts. Your allowance for bad debts expense, guys, uncollectible accounts, no, and impairment losses are all changes in accounting estimates. Huh? And finally, changes in fair value less cost to sell or of the non-current asset held for sale, pati na rin sa biological assets, since these are the basis or measurement basis of the said items under assets. No? So please remember these examples. These are the typical examples and usually being asked in the theory side. So either number 9, change in accounting policy, retrospective. Pag nakita niyo dyan, accounting policy change. Or number 10, it deals more with amounts, with the items, with the basis of the said items or amounts, or the amounts itself. Changes in accounting estimate, prospective application. Errors, I mentioned already this one a while ago in the previous slides. Basically, it includes the effects of mathematical mistakes, mistakes in applying accounting policies, oversights or misinterpretation of facts, and even fraud. So, bahala na yung accounting theory for frauds. But basically, if there are errors and frauds that resulted in a financial statement that was not fairly stated or reported, errors or frauds should be reflected, like a change in accounting policy a while ago, diba? Retrospective application. Ayan, yung kanina, to errors, retrospective applications. Ayan, mathematical errors, ayan, 10,000, ibig sa 10,000, 1,000 lang na-disclose or na-report or the rest. Okay, that's the end of Pass 8, accounting policies, changes in accounting policies, estimates, and errors. Let's read our chat box. I'll end the first recording. We'll take a